Our next panel discussion is on Ctrl+Alt+Lend+How, starting digital journey in secured lending. Explore the initiation of digital transformation in secured lending and innovative pathways for digitalization strategies. Delve into the key steps and considerations from concept to execution when launching into digital secured lending. Gain valuable insights in this panel discussion into navigating the landscape of secured lending in the digital era and anticipate future horizons. Ladies and gentlemen, may I please request you to take your conversations outside as we are about to begin our next panel discussion. Ladies and gentlemen, may I please request you to take your conversations outside, please? We would like to settle down and begin our next panel discussion. For this panel discussion, ladies and gentlemen, I would like to call on stage Jyothirlatha B., CTO, CIO, Godrej Housing Finance; Jijy Oommen, CTO, Aavas Financiers Limited; Srikant Rao, Business Head, Loan Against Property Credit Saison, India; Vipul Rawal, New Initiative, smallcase; Sumeet, Gambhir, Business Head, India Gold. Ladies and gentlemen, let's have a huge round of applause for them.
Hi, good afternoon, everyone. Am I audible? Yeah. Good afternoon, everyone. My name is Sumeet Gambhir, and today we are discussing a very interesting topic on how should one start the digital journey in the secured lending. Let me just give you a context. We have seen a massive growth in the digital lending side, mainly on the unsecured lending part. Over the last few months, the RBI has taken a stance, a conservative stance on the unsecured lending. So now we are seeing a lot of interest from the fintechs and the lender side on the secured lending digital journey as well. So let us just start with a quick round of introduction. I'll start with myself. I am Sumeet Gambhir. I head business at India Gold. We are a doorstep gold loan company and provide gold loans at the customer place. About my experience, I worked for 15 years in the financial services. In the last 5-6 years, I worked across various fintechs and consumer tech companies. So now I'll ask my fellow panelists to also give a brief introduction about themselves. Sure.
Hi, good afternoon. I'm Jyothirlatha. I'm heading technology in Godrej Capital. Godrej Capital is a lending, is into the lending domain, and we are into multiple products, be it housing loans, LAP, and business loans, and SME loans and all. We are actually a 4-year-old organization, and yeah, that's it from my side.
Thank you so much. Good afternoon, ladies and gentlemen. My name is Jijy Oommen. I'm the Chief Technology Officer for Aavas Financiers. We are an affordable housing finance company based out of Jaipur, operating in 13 states across 350 branch offices, and our prime focus area is affordable housing, in underserved kind of markets, and our focus is in semi-urban and rural areas. And excited to be a part of this panel discussion today.
Good afternoon, all of you. I'm Srikant Rao. I lead the loan against property business for Credit Saison. CS, as we call it more popularly, has been in circuit for 5 years. We've been steadfastly, improving our footprint on the unsecured side. We've just started working on secured, and I've been a fan of digital evolution on the secured side primarily because on unsecured there's been a lot of action, and it's high time that we start seeing some action around secured as well. So that's it.
Good afternoon. This is Vipul Rawal from Smallcase. We are an investments first platform. We have recently launched a full stack for loan against securities, starting with loan against mutual funds. So yeah, look forward to an interesting conversation on how we are going to go about digitalization of secured credit.
Yeah, thanks a lot, everyone. Let us just start understanding on how the secure lending is different from unsecured lending from digital journey perspective. So maybe we can start with Jijy.
Yeah, sure. Unsecured lending predominantly has been slightly on a slower path when it comes to digital adoption and digitization. Over the last few years, if you have noticed, the unsecured lending companies have really taken the lead in digitization because of primarily, so when you lend money, right, you have to really see the ability and intent of the customer to repay the loan. That's the most important thing that you need to look at. But when it comes to secured lending, you need to also look at the, the collateral more deeply. Because if customer defaults, then you need to be able to liquidate that property or whatever may be the asset and, recover the money, right? So when it comes to digitization of secure products, particularly mortgage, I feel we have been slightly slower in that space. But now the speed is picking up. When you look at the secure lending, particularly mortgage, see, you need to look at this as a, from multiple dimensions. So one dimension is that because it is a brick and mortar model, you need to ensure that your team on the ground is efficient. So there's a lot that tech can do to enhance the efficiency of the people who are dealing with the entire end-to-end process. And then the second one is going to be the customer experience, because today the Digital India, the Digital Bharat initiatives in all spectrum, our customers have now experienced fabulous digital journeys, and we need to ensure that the customer's journey is super experienced and enriched. And then, of course, the businesses are growing at a faster pace than ever before, so you need to ensure the scalability of and growth of the business. So, from a digitization perspective, we need to look at all these spectrums and see that how you're positioning the tech to enable the organization in the journey.
Sure.
Of course, there are so many different phases of digitization there, and we can definitely talk more about it as we move forward.
Right. I would ask my fellow panelists if they want to add something here.
Yeah, I think the main difference between unsecured and secured, there are two extra steps which needs to occur, right? First is collateral valuation. How do you assess whether what is the value of this collateral and the genuinity of the collateral? Right. And the second step is pledging or lien marking the collateral, right? So these are the only two steps which are different from a unsecured credit point of view, right? So for some of the collaterals, things are becoming digital for these two steps. And for some collaterals, it's not so easy to do these two steps digitally, right? So that's why we are dealing with some of the collaterals which can be done, these two steps can be done digitally.
Right.
Yeah, so if I may just add.
Sure, Srikant.
So I would like to put secured lending into two different cohorts. One is where it is more of a commodity, so which is a standard security. When I say standard, it could be a car, it could be a two-wheeler, it could be securities, mutual funds, etc. And the other part is where each security is unique in its own nature. So the first part, the first cohort is easier to automate, and I think we've made some headway across the industry. The second one, since it's unique by each transaction, is a little distant from getting to the desired digital footprint. That's it.
Yeah, thanks, Srikant. Going forward, how does one think about starting the digital journey in secured lending? Whether they should first make the whole process a manual one and then pick each and every step and then digitize it, or right from the beginning, the they should start with digitizing the whole process. Rather, they will start that the process are digitized, and then they will build the journey. So how one should start it? Jyoti, if you want to take this.
So I really don't believe in the piecemeal fashion of building the journeys, and it is very difficult to actually transform once the users are used to one kind of physical process, and then you are giving one system, then that adoption will become a problem. And also what I feel is when you are thinking, because that advantage may be there only for the few organizations which are kind of greenfield implementation and all, but if you are having the that kind of opportunity, you will have to think first digital first, and then I think all the processes have to fall in place. But having said that, in secured lending, it is very difficult. I think my fellow panelists have already covered. It's very difficult to bridge some of the gaps. Like in the new IT Act and a lot of digitization and digital signatures and e-sign and all these processes have become valid processes. But even then, ecosystems are not ready. So once your SROs are ready and your property and your the projects, the from where you are getting the documents and all, that ecosystem, if it is not ready and all, you becoming just a digital company is not going to help the process. So that way it has to be a kind of balanced approach, and where what processes you can completely digitize. It cannot be a kind of overdoing just for the sake of doing. It's a kind of we can say physical approach, but in the physical channels also, the intelligence of the users can be enhanced using our digital journeys and digital the insights and all. That is what we have done, and that is what is the right method according to me.
Got it. Yeah. Thanks, Jyoti. So we, in the secured lending part, we have multiple products. So there are loan against property, there are housing loans, there are vehicle loans, then there are loan against mutual fund. I would like to understand whether all these secure lending products, they are equally short of digital footprints, or they are at a different stages of the digital footprints. Possibly one might be ahead of the other. So yeah, if we can discuss on that.
Yeah, definitely. I think, as I said earlier, just the two steps, doing that, as rightly said, that it's difficult to do it for a property because each property is very unique in itself, each transaction is very unique itself. While for some of the other things like car loans, now things are getting more and more digital. You're getting approvals in 5 minutes, right? So all that kind of thing has started happening. So yeah, I think
Got it. Even you can, people touch upon how the non-physical assets, the digital journey in the non-physical assets in the secure lending part. For example, you do a lot of loan against securities and everything. So possibly you can also throw some light on how quickly it can happen as compared to a physical asset.
yeah, so for each asset class is different. For specifically securities and for mutual funds, the regulator has created central depositories, right? Because of which it's very easy. If you have any security in your demat, then through just one source, which is your depository, I can get a pledging done in real time through APIs. Right? So that really creates a differentiation that you are able to give the loan into the user's account within a matter of minutes.
Right. Got it. So most of my fellow panelists are from the housing loans and mortgage loans. So let us just understand more on the how the these property loans have been evolving. So if you can discuss on what is the digital evolution which is happening in the mortgage loans, how far we have come there, what are the missing pieces?
If I may take this.
Yeah, Srikant, yeah, you can take this.
So, as each of us has already expressed that the second cohort is where a lot of work still needs to happen, right? Each property being unique in itself. The digital evolution hasn't been at the pace at which the rest of the products have moved. Why so? Because, one, it is a larger ecosystem play. A lending institution alone cannot build a journey which takes the home loan onboarding experience or a loan against property onboarding experience end-to-end digital. you are dependent on a legal vendor, you're dependent on a builder, you're dependent on a valuer, and multiple other agencies which eventually feed into the decision of lending. That is one part. The other part is title check, charge creation. If you look at SROs, they have now started coming online, but for lending you need a historic data, 13-year track record. Those, not all of the SROs have evolved, and therefore while you can get today's ownership detail, but if you look at the trail you may not find. Therefore it is just short of a conclusive feed on the title. Again, valuation, there are players who give a ballpark valuation in certain catchments, right? But when you want to value a specific property within that catchment, the valuations will differ. Property in a certain project will be valued at a much higher valuation or a lower valuation as compared to another property in a next door kind of a project. So to that extent, conclusivity is what is missing, and therefore that 1 mile short. Lastly, when it comes to charge creation and release of charge at maturity, SROs still can give you current title, but if I want to create a charge online or relinquish the charge once the loan is matured, those links are still missing. So hence, since it's so complex, I think it's maybe another 4-5 years until we see light on end-to-end digital.
Sorry,
Yeah,
sorry,
maybe-
I have a follow-up question on that. Sorry. As I said, there are 2 steps. I can understand that a lot of housing loan companies are not able to digitalize because there is no public infrastructure, unlike other assets where Vahan portal has come up, where there are repositories, right? But apart from these 2 steps, the other steps of the journey are also not digitalized in the LAP or the housing loan industry by a lot of players, right? Any particular reasons for that?
Maybe I can pick up this question
Yeah, sure.
if you're okay with it. See, if you see the entire customer journey, right, in a secure lending process, you have, if you divide the process into multiple buckets, one bucket is the sourcing bucket. Then the next one is how you assess the customer. Then the third bucket is how you assess the property.
Right.
And then the fourth bucket is how you take decision, how you price it correctly, how you manage your entire, records, decisioning engine, and finally how you disburse loan. So if you really look at the entire chain of processes, I would still think that majority of the processes can be digitized, and we have done that to a great extent in the recent times. So there is definitely, so leaving aside the property assessment bit, of course, which is definitely a hard part as of now, because the property land records are still not ready in the central repository, while the government has initiated the modernization of land records in 2008, but still we have not reached a full state of readiness. I was doing some bit of research before coming for this session. Some 13 states have digitized, but then you have your past records, right? So when you have to, when you have to underwrite, you have to look at some 13 years chain documents, right? So, getting all of them, and they have their own challenges, right? Because so far these records have been decentralized in local languages, different formats. There are so many challenges, right? And every state has their own level of maturity. Right. Having said that, if you keep that piece, and that's also shaping up, and I could also notice that there are certain, that space is shaping up, but it's going to take long time. So we have to accept that fact. But all other processes, there is definitely a tremendous opportunity to digitize and, bring, a lot of efficiency and customer experience in the entire value chain. Within the property assessment process itself, you can bring in a lot of digitization, like, geotagging the property so that your collection process becomes more connected and efficient. Similarly, if you were to really price the valuations correctly, if you were to do the valuations correctly, if you can build up the data over a period of time and see that, what has been the valuation given. Similarly, you can bring in some kind of analytical scores which can enable your underwriter with more, while taking decision, with more confidence. So I think in the whole process, leaving the full automation layer on the property side, and of course digital signature is another point of debate. While we have the changes happen in the IT Act, all of us want to go very slow there because, at the end of the day, the value at stake is very huge, and our courts still operate in a, manual or semi-automated manner. So people would want to, be cautious there. But having said that, leaving these two nuances aside, there is definitely a lot of opportunity for digitization and making the journey much more seamless and straight through.
Yeah, thanks, Jijy. Yeah, sure.
Yeah, I would like to add one point. See, doing the digitization of the processes is one thing, and then weaving all these processes together and then giving the seamless experience for the customer is one thing. If you see, I think as Jijy mentioned, there are 3 buckets, let us say. First is your onboarding. In the onboarding, we do have the KYC processes and all. But if you see the VKYC, the regulator new guidelines and all, it is not that seamless because the journey breaks there, because you'll have to wait for the customer to come on the call, and there are lots of the activities involved in that. CKYC, if you go with, and probably the risk category of the customer changes if you go with CKYC. That puts some kind of constraint on doing the KYC as a seamless integration. The most important part in this entire thing is credit underwriting. So how do you do the credit underwriting? You are dependent on, most of the times, you are dependent on other customer to log into his bank site so that I can get the data automatically through the statements or whatever the scanned statements and reading those statements. All those things are there, and the account aggregator network is actually expected to improvise this particular journey. And apart from that, there are so many other documents that underwriter requires, like be it salary slips, if it is a salaried segment and all. What is the authenticity of those documents? It becomes a kind of manual process, or your FCU units doing some kind of scanning through all the documents. And there that physical, the one leg of physical activity comes in picture. So for that, actually alternate data sources would be required for us to underwrite the customer, that the public infrastructure that is going to set up. I think it's similar to maybe the other CBIL type of this thing that may help us, but not to the full extent.
Got it. Yeah. Thanks, Jyoti. You and Jijy have come, there are so many similarities in terms of that both of you are from the housing finance company, but there are a lot of differentiation as well. On one side, we are seeing the prime customers, prime borrowers, prime properties, and on the other hand, we are looking at not so prime properties and not so prime borrowers. So how is the underwriting differs there? And whether that whether it adds to the time in decisioning, if you're talking about the non-prime properties and non-prime borrowers, or is it as seamless as the prime ones?
It is definitely not as seamless as prime customers and prime properties. On the customer front, we have, because we deal with non-prime customers, majority of them are non-salaried. You may not find the income documents very correctly. Also, so, our underwriters, so that's the signs of underwriting that segment, right? So I think our team has cracked that very well at Aavas. If I take an example, right? So if there is a tea shop, tea seller who is approaching you for a home loan, how do you assess the income, right? I mean, today you have a lot of UPI transactions, and with bank statement analysis and your account aggregator, it is far more seamless. But at the same time, you still have a lot of cash transactions happening at that layer. There's one example, right? And there are so many such examples. So what our underwriters would do is, so we straight away, if you ask the customer how much you earn a day, you may get a number, but which might be different from the reality. Right. So what our team would do is, they would go to that tea shop, sit for several hours, to watch, right, how, what kind of business they do. They ask questions like, how many liters of milk you buy? That will help, understand what will be the yield or what is going to be their sales, right? So like that, for every different small business, there are ways in which, we do the income assessment. Having said that, with now UPI transactions, things have become better. When it comes to, and of course, there are a lot of digitization going there, and we do our the camp preparations automatically. There's a lot of input data goes inside in that process. Then, of course, the personal discussions with the customer, capturing that information at the right place, using that in your analytical logic, and of course, you can't fully rely on the analytical engine, right? You need to also apply your mind, because every customer is unique, right? Unlike the case of, salaried customers whose income can be very easily assessed, right? Then, of course, on the property side, it is definitely, not easy, right? So, you may not have that, 20 bar, 1 XYZ, apartment. That's not going to be the address. It's going to be like, दूध के दुकान के पीछे, XYZ गली में तीसरा घर. So that is the kind of addresses that you have. So it's not going to be easy, right? So, of course, it takes a lot of efforts for our team. And for a sourcing and underwriting team to really understand that methodology and science, it takes a lot of effort and time. Now, a lot of our seasoned sales team, they do half of the work of underwriter, because they know how to identify the property, they know how to check the boundaries of the property to see that whether this property will go through correctly or not. And that saves a lot of effort and time, right, in the rest of the journey. So I think there is no quick fix to this, but every organization need to really evolve in that process, and that's a journey.
Yeah. So possibly now I'll ask from Srikant here. Srikant, you have done a lot of work in the mortgage lending from the business and also I think from collection perspective. If you can help us understand how the security creation, perfection, and repossession is happening in this, and how digitization is helping it, how many missing pieces are there, or rather, a lot of things are now online and all that. If you can help us understand that.
Yeah, thanks. A lot of the discussion around digital journeys end up at onboarding stage. So when I look at digitization, I look at the whole spectrum, from prospecting to onboarding and servicing and eventually relinquishment. The challenge, as I said, while the SROs can still throw up data in terms of ownership, charge creation digitally is still elusive. Charge relinquishment is elusive. I cannot impose or enforce my security rights on the collateral, right, online. So I go through an ecosystem which is a lawyer, which is maybe a court, which gives me attachment order. I put an arbiter there. So everything is still offline there. So, and maybe sometime until we see light in that, it would be fair to look at other developed economies. So for instance, I would like to quote PEXA. It's the property exchange of Australia. And invariably we end up saying that we have multiple states, we have every state having their own rules, right? But if you learn from PEXA, which is a stable platform today in Australia, tried and tested, they have multiple counties, multiple states, and each state having its own stamp duty charges, etc., etc. Rules differ by states. They have an end-to-end digital journey. One, I check the title online. Second, I check if there is any encumbrance, if there is any challenge to the title. Third, I get to create charge online. Obviously, there is an intermediary who is an authorized intermediary by PEXA. 4, I get to also record my charge on the security and, tag it as under enforcement. And the 5th is I get to discharge my rights on the security once the loan is matured. So that journey, if we learn, I think there are many countries who would have evolved to that extent. As a country, as a developing nation and an aspiring global leader, I think we should also learn from them and get digital.
Yeah. Thanks, Srikant. So now we hear about a lot about how AI and ML is helping the various the overall lending process and across various products. So on the secure lending part, if we can understand the usage of generative AI and ML and all these technologies, how far they are helping us, and what can be the way forward in that. Jyoti, yeah.
So I would put it like this: AI and ML are kind of nudges to the credit underwriting teams, just with the insights that AI and ML are giving. So credit underwriting may not be a kind of simply rule based without doing the eyeballing of the entire case. So, but they are definitely helping the underwriters. It is not the mediocre underwriter also will be able to understand the case in a better way. And this is evolving. I think if you see 2 years back how the algorithms were helping the underwriting process, and if you compare it now how it is happening, there's a huge difference. The underwriting models and eligibility methods and the scorecards are being made using the AI/ML algorithms. And coming to Gen AI, at least I think I would like to see the use cases which others are using, but currently what we are using is for training purpose, and is for the learning. Of course, in the marketing and all, there's a bigger use cases are there for Gen AI, but otherwise it's in the L&D and how people will be able to understand the policies, and also there we're actually using it.
Yeah, so if I may add a couple of points to this point. AI has multiple use cases in the lending journey, and as all of us know, right, AI is definitely revolutionizing every single industry, and lending also has a very strong place for AI. Some of the use cases that we have been able to successfully demonstrate and use are like this. Say our every loan application is very unique, so we don't want to be fully dependent on the AI algorithm to take the decisions because of the non-prime reason, okay? Because every customer and every property is very unique. Having said that, the underwriters are of different levels of maturity. So when an underwriter rejects a loan application, and if you have an analytical score that is throwing up the score, then it gives the underwriter confidence to take that decision. Or when an underwriter approves an application, the analytical score actually gives that confidence that you are taking the right decision. Is it way off track from the decision that you're taking, right? So that is one use case that we have implemented in our journey. On the portfolio health tracking, AI is very, very useful, because you have got so much internal data that is getting, accumulated over a period of time, like customers' payment history, behavior, customers' interactions with you, and all of that. On the other hand, you have your, credit bureau data constantly available to you. So, and there are several other data sources, right? So, we have been very effectively able to, put the analytical engine which can help us do the default predictions. And almost 70-80% of those predictions, are positive. So even if you leave aside your 20-30% false positive, still, it is definitely adding a great value. You are able to reach out to those customers before they default, right? Or do whatever is required. So these are like few use cases. When it comes to Gen AI, I'm of the view that this is definitely going to be a great help. Of course, in the internal use cases, your training, knowledge enhancements, FAQs, and all of that. On the other hand, for customers as well, you know, I was having a chat outside the, you know, the meeting room in the morning that there are now tools available where you can, customer can talk, you know, in native language, and it gets converted into, you know, your digital script, and then your analytical engine runs on it and give you the response in voice output format in the native language. So technologies are evolving. Of course, I don't think it is fully matured because Gen AI as a concept is very new, but this is definitely going to have a very positive impact in the lending value chain as well.
I can also add here that like in our business, we also, the gold assessment is one of the basic core activity which we do here. So even we are also building our models because of course it involves, the gold assessment involves that rubbing the gold with the limestone and all. So we are also capturing those photographs and we are also building a model to understand what will be the confidence level. So as Jijy mentioned that it can be trained. So we are training our backend model, and if the auditor and if the gold assayer sees that our AI model is also giving certain value, so it gives a lot more confidence in that assessment and auditing. Yeah. Now going to some other products on the secured lending side. So of course we have discussed a lot on the mortgage loans. It would be great to understand what is the future in the secured lending from the digital perspective on the other loan products. So possibly small case is doing a lot of activities there. So I would love to understand from people on that.
Sure. So as I said, we are already live with mutual funds and securities, so stocks. But we are also exploring other digital assets, all kind of digital assets, whether it's your ULIP insurance policies, whether it's your NPS, EPF, all these kind of assets which can unlock the liquidity through secured lending. So that's what we are exploring.
Yeah, that's very interesting, Vipul. Thanks a lot. Now we can take some questions from the audience because we have very well experienced panel with us. So we'd love to take some questions.
No, thanks a lot. It was a great session. My question is regarding how do you see NIM profiles vary on an industry average in each category, and also are there any fundamental differences in the delinquencies or collections in each of this category?
So you want to talk about the various products in the secured lending or NIMs because it will vary from product to product?
On an industry average kind of, yeah.
Okay, so I think on the housing loan side, if you can take this up. Both on the, I think it will differ from the prime and subprime kind of borrowers. So, yeah. Jijy,
Instead of no, it's saying what is the number and all, because it all depends upon whether it is a housing loan or whatever is a product. It all depends upon your ticket size and what kind of customer segment you are targeting. So maybe at where you are taking more risk, there is the delinquency, the chance of delinquency is definitely higher in those segments. So when you are having the product mix more with your in the risky segment, then you are bound to have more delinquencies. So that is the.
So if we can quantify those NIMs, what it should be? If it's a prime borrower and if it's a not so prime borrower.
So we CTOs or CIOs may not be that much used to talking about numbers, so I'm just, trying to pitch in here. So, frankly, look, today your own borrowing rate in the market is subject to the rating that your company has, right? And the rating is dependent on various parameters, right? So that is your input rate. The output rate is based on how, well you are able to sell your product to the end customer, right? Of course, today the market is competitive. Whether you take any kind of product, whether it's a vehicle loan or a gold loan or a property loan, LAP, housing, they are all competitive, right? But the rule of the game is that if you are able to fetch a good ROI, assessing the right getting the right customer on board, that's very important because you're underwriting the risk and you need to price it at the right level, for which you need to know what level of risk you are taking, right? So if you're able to get your interest, your ROI rate right, of course, your input rate is always standardized based on how well you manage your organization. But the real game is how efficient you're able to manage your operations. Because your cost is a major factor, right? And that's where the technology, digitization,
Sure,
automation, they all play a big role. So I think it is a combination of all the factors which will actually determine your profitability by end of the day. Right?
Possibly we can take one last question. Just one.
Hi, good afternoon, everyone. Question to Vipul, guys. Since you are, starting off loan against mutual fund, just want to understand what is your assessment of this market size, given this product has traditionally been restricted to HNIs and large promoters of large group companies, etc. So, what is your assessment of the market size for this product?
See, the current market size is not really indicative. As you rightly said, the product so far has been only made available to HNIs because of the earlier, just like other form of assets, this kind of assets were also getting pledged physically. And for that physical process to happen and the cost of that process didn't make the amount of loan to be smaller. But now with digitalization and loan amounts being smaller, a big market unlocks, right? So, which is retail investors. So, I think in mutual funds alone, there is a retail investor participation is around 20-25 lakh crores. So that's the kind of potential in mutual funds alone. But then there are other asset classes like stocks, where again retail participation is around 20 lakh crores. So yeah.
I think we are just running out of time. Possibly we can take more questions offline. So yeah, thanks a lot to my fellow panelists. I think it was a great discussion, great understanding on how the secure lending works in the digital avatar. So yeah, thanks a lot.
Thank you so much, Sumeet, Gambhir, for conducting this session. A lot of food for thought there. I'm sure you can ask the panelists questions outside, and they would be happy to answer. Can we have a photograph, please? Thank you so much.